Hi, I'm Kerry with Best of Us Investors. I just got done watching two videos by Stock Mo. If you watched my video today, this is Wednesday. I'm basically saying you need to get out of China. You need to vacate any stocks that you have. In fact, basically stated that on July 9th and have followed it up on a regular basis. That I believe there is some disorder over there. They are going through some regulations. They are changing the structure of their stock market and what they're allowing their companies to do, and it's just a good time to get away from it because there are better opportunities with less risk here in the United States. But then I went to Mo, and for the last 2 days, Mo is beating the drum pretty hard to get back into or to add to positions in the China market. I disagree. But at the other time, I respect Mo. There are very few of the YouTubers who really have any history in the stock market. Mo was a financial advisor. He did some teaching in community colleges and high schools on investing, so he has some credibility. But this time, Mo, I disagree with you, and I want to give my interpretation of what's happening and why I think it would be wise just to get away from China for a while and let them get their shop put back to order. We're going to cover that in this video. First of all, though, I got to tell you, I'm not your financial advisor. I'll be right back.
Best of Us Investors presents Kerry Griegmeyer.
Okay. China is in turmoil right now. They have some situations going on that they're addressing, and I think they're going about it the right way, actually. And I would ask you to read an article in the Wall Street Journal. It was Friday, July the 23rd, on page A8. China's Beijing crime fights cast pall over businesses. This is the article, and I think you need to read it and come to some understanding of what's going on over there. China has grown rapidly. I would compare it to the growth that the United States experienced in the Roaring '20s, as the Industrial Revolution, and then even through the '30s, after the Industrial Revolution took hold. There was a lot of crime in our communities, and there was a lot of bribery and a lot of poor workmanship, and that's what's happening in China right now. And Ping is doing everything to try to straighten it out. A part of what he's doing is also reining in those companies that are violating the rules that they have set up for listings of their companies in international markets. In essence, they have said you can't do it. So these companies, there's I think about 334 of them, have created shell companies in the Cayman Islands and have then listed those shell companies on the NASDAQ Stock Exchange, and in some cases the New York Stock Exchange. China doesn't like it. They don't want it. You're breaking the rules, in essence, is what they're saying, and they're reining them in. Now, will they at some point decide that, okay, we do want to allow outside investments and we'll give you the wherewithal to do that? They might decide to do that, but right now they're not. And so I see Mo comparing the Hang Seng index to the S&P and saying they're going in opposite directions, and this presents a wonderful opportunity. In fact, he's naming some stocks that he feels that people should go and invest in. And I wrote them down. Alibaba, which is down 41%, Tencent down 41%, Neo down 32%, Yum, this is the Yum brands of China, JD down 40%, and Baidu down 50%. Well, and then he's saying that the PE ratios are real bargains. Well, it isn't about PE ratios. It's about how they're going to come out of the other side of this turmoil they're in, and we don't know that. We can't look at them and say, well, the PE ratio is down to 7. I think that's what he said on Baidu. It has nothing to do with PE ratios. It has to do with the question in the minds of not only the United States, but also the investors in China as to how they are going to profit in the new China. What are the new rules going to be, and how is it going to affect the balance sheets of the Baidus, the Alibabas, the Tencents, the Yums? We don't know this. And until you know it, there is a risk that's there, and it's a political risk. It's not a financial risk. It shows nowhere on the charts. And until you know that, you're rolling the dice because, again, it has nothing to do with fundamentals. It has to do with what the Communist Party decides the structure of these companies are going to be after this is all settled. The other issue that you need to be aware of is China is not real secure about how they're going to come out of this whole coronavirus situation. There is speculation going on that is saying that this virus was known of very early on in the middle of 2019, and the Chinese government decided to hide it. And then when it became an issue, they again decided to cover it up. I don't know what that's going to turn into. I said in a video, if they all of a sudden come out and say, hey, we made a mistake, we should have told you about this virus when we first learned about it in November of 2019, but we didn't, and we're sorry. Is that comparable to when after the Japanese bombed Pearl Harbor, they came and said we made a mistake, or Hitler invading Europe, we made a mistake? No, they were punished. They had to pay reparations. I asked in a poll just today of my viewers, if it's determined that China did in fact know about this and hid it, should they pay reparations? And 84% of you have said yes, they should. Well, what might those reparations look like? And how might that affect the companies of China and their profits in relative to the United States? How will that affect China's economy? If we here in the United States took our national debt from 20 trillion to 28 trillion in the matter of a year, would they owe us $8 trillion? I don't know. And as long as I don't know, I don't want to own any of China. So, Mo, I respect you entirely because you've been right. You have more courage than me with your triple exposure on some companies, and I know you've made a lot of people a lot of money, but I think you're wrong on this one. I think you need to be advising your listeners to just back away for a while. Well, let the dust settle. Let's see what happens, and if in fact they come to a good conclusion that we as American investors can profit from, if they in fact basically say no, the listings in the United States and in London and whatever are no longer valid, we don't know what's going to happen. I saw something yesterday that some people are speculating that they're just going to bring all the listings to Hong Kong. And that way, if you want to trade on it, you're going to have to trade in their ballpark in Hong Kong or on the Hang Seng. So until we know this, we shouldn't be putting our money at risk. I really, Mo, again, you have done a phenomenal job of advising young people on investing and teaching them, but I think you got this one wrong. Okay? Again, that's my opinion, and that's all it is my opinion. I'm Kerry Grinkmeyer. I'm with Best of Us Investors. I have another channel called Best of Us in Retirement because I think there's a lot more to investing than just investing. We like to think that part of it is also understanding how our tax code works so you get to keep more of what you make. And that's one of the things I try to address over in Best of Us or in Retirement. And then the end goal should be to build family wealth. So you make a difference not only in your life, but the lives of those who follow you. That's what Best of Us Investors is all about. Again, Mo, I respect you. I like what you're doing. You're one of them that I go to when I want to see what's happening in the YouTube world. Keep up the good work, and hopefully sometime we can chat. Be talking to you later.